Hello everyone, hope you're doing well and welcome back to the Baking Analyst channel. On this channel, we cover everything from cryptocurrencies to economics to personal finance as well as DeFi. So if that sounds like something that's interesting to you, do consider leaving a like and subscribing to this channel. If you're completely new to the world of decentralized finance and you want to learn how to invest in it or even earn a yield on your assets and make some passive income earning off of cryptocurrencies and making up to hundreds of percents of APR during the bull market that might be coming up soon, I actually have an online beginners course for DeFi users that you can find in the description down below. It's uploaded to Skillshare, and of course it will come with a free trial if you use that link. So this could be your risk-free way to learn about using DeFi as well as looking at all the other courses on Skillshare in case that doesn't float your boat. You can also join our Discord server where we have our community of DeFi natives who are always sharing their alpha on that platform. You can join that in the link down below as well. So with that shilling out of the way, let's jump right into today's content. Today we want to look at whether or not Cronos could be secretly in trouble, especially with all the recent updates to the crypto.com cards. You know, the crypto.com cards used to have very high rates of cashback. They cut that back sometime in late May to June, and now they're also cutting back merchant rebate benefits in the form of Spotify and Netflix. So while there were originally commentators trying to downplay the situation and saying that it could be a bullish thing because there were rumors of crypto.com being involved in an acquisition of some other company, that does not seem to be the case. The Occam's razor reasoning method suggests that the simplest explanation is probably the right one, and the simplest explanation in this case is that they are trying to save money to stay afloat, especially during a bear market where funding might be more scarce. So this definitely looks like a money-saving move, and that also corresponds to crypto.com's contraction of the workforce as well as hiring efforts. So this does show that, you know, companies are trying to save money to remain sustainable. In a sense, we could see this as a prudent thing to do. However, we also cannot get rid of the possibility that Cronos, the DeFi ecosystem, might be impacted in some way or another if crypto.com were to say go the way of Celsius. So in today's video, we will be exploring what would happen if we saw Cronos freeze withdrawals. So today we will be going through a stress test of Cronos and seeing how crypto.com's DeFi ecosystem could hold up in the event that crypto.com does a Celsius. Now, of course, this is all hypothetical. Crypto.com is still accepting withdrawals and functioning as normal. However, it is just that these recent cutbacks in terms of costs has gotten some people concerned. And in that regard, it could be a good idea to consider one of these tail risk scenarios. So let's first go over the scenario. The scenario is one where crypto.com suddenly freezes all withdrawals off their platform, and basically people are trying to get their USDC and USDT coins off of the Cronos mainnet and onto perhaps something like the Binance Smart Chain, where they can then withdraw their money to Binance. We saw this kind of thing happen in the Harmony One bridge attack, where the USDC coin basically depegged from the value of $1 because people were unable to bridge it out. So today's scenario will go through what will happen if people ran from the bank to all the available bridges on Cronos except for crypto.com, and whether or not Cronos is as at risk as Harmony One from this kind of thing happening. All of this comes from a risk management lens, and hopefully at the end of this video you might come to the conclusion that diversifying your ecosystems might make some sense. So let's jump right into it. So the first thing that would happen in such a scenario would be that people would try to swap everything to anything that could be used on a bridge, and the bridges with the most liquidity on the Cronos chain, going to a number of different reputable chains, would include Connext, which used to be Expolinet, as well as Multichain. I have included only these two bridges because of the fact that a lot of other smaller bridges don't have that much liquidity in them, and therefore the impact of these bridges would not be material. For example, if we were to look at some other bridges that operate through Cronos, we'll find that trying to do such a large trade, for example, even 100k would render that pool liquidity insufficient. And the same thing can be said for any of the smaller chains if we try to do the very same thing. Pool liquidity insufficient, we wouldn't be able to bridge out. So I've chosen these two main bridges with the largest TVL. We've also skipped over on Evo DeFi Bridge because they have recently officially rugged by saying that they are no longer processing bridge transactions. In this case, we will be looking at the explorers, which are Connext Scan, as well as the multi-chain explorer, which contains all the data that we could possibly want. The next thing to highlight is that this scenario will only be looking at the bridging of stablecoins out from the Cronos ecosystem simply for the sake of simplicity. Now, of course, there is also the possibility that Bitcoin as well as Ethereum on the Cronos network will be attempted to be bridged out through these means. However, it seems that the main ones that will be bridged out or have the most liquidity in them on these bridges tend to be the stablecoins. The shadow price comparison, or the worst case scenario price of a coin on the Cronos network relative to the external environment, would be the easiest to compare if we looked at only stablecoin. So let's look at what could possibly happen. To do this, we first need to find out how much USDC, USDT, DAI, and other stablecoin there are on the Cronos network. And to do this, we can use a block explorer. So this is just really basic on-chain analysis. We can see that there are about slightly over a billion USDT and USDC on-chain on Cronos. So I've actually compiled an Excel spreadsheet that contains all this data. For example, we have about 588 million in USDC on Cronos. We have 836 million of USDT as well as 161 million of DAI. The next step would be to go and look at the overall amount that is locked on these bridges. For Connext, they have this thing called the Connext Scan Explorer, and this allows us to take the total liquidity of each stablecoin on this bridge and deduct the amount that is on the Cronos side. And to do that, we just copy and paste this amount over here. We go to the Excel spreadsheet and then we can paste it in with a deduction of the Cronos amount. This has then amounted to about 22.7 million on-chain. The final bridge that we said we will be looking at was multi-chain, and multi-chain has an explorer of its own. If we go to the explorer and filter for anything with USDC or USDT, then we can find the top positions that are on the bridge. And we will be taking all data points down to the 1 million mark, because anything beyond that is unlikely to be that material. We do the same thing for DAI, and we take the top positions in DAI across the different chains up to 1 million, and then we go ahead and do our analysis. So that data can be seen on this tab over here. So all of these are basically the large pools on the multi-chain bridge. Then we went ahead and made a pivot table, which allows us to filter for different networks that people are likely to bridge to. And these have been selected based on the fact that the stablecoins bridged out to these networks can either be directly redeemed for US dollars or can be transferred to a centralized exchange and redeemed that way. And in this case, we have chosen Avalanche, Binance Smart Chain, Ethereum, Phantom, KuCoin Community Chain, linked to KuCoin of course, OKC, which is linked to the OKEX exchange, as well as Polygon. So now if we close that filter, we see that the total bridge backing from multi-chain is about 813 million. Now we also have 22.7 million on the Connext bridge, and if we sum it all up, we find that the total bridge backing under consideration is about 835.5 million. The next thing we can do is divide this total bridge backing by the total number of USDC, USDT, and DAI on chain on the Cronos mainnet, and find the estimated price of the USDC if it were to really come to a DPEG event. And the number that we come to is actually not too bad. It's about 53 cents. So all in all, this suggests that the Cronos network is in a considerably stronger position than the Harmony One network, simply due to the fact that there are many more bridges and much more exit liquidity. Now, a disclaimer would be that, of course, this does not include the effects of a sudden liquidity shock on all these other bridges that could lead to contamination effects elsewhere, such as people being unable to withdraw their stablecoins from other smaller chains using one of these bridges. So I guess the moral of this story is that while Cronos does seem to be in a relatively strong position, despite depending a lot on a centralized exchange, crypto.com, it could be a prudent strategy to diversify your holdings across multiple chains, especially in the interests of good risk management, because this is still a significant drawdown. So all in all, I hope this video has been useful and informative. If you like this video, do consider leaving a like and subscribing to this channel. If you want to see more such content, we will be coming out with these videos on a bi-weekly to a weekly basis, depending on viewer demand. So do stay tuned for that. With that being said, thanks for watching, and I will see you in the next one.